This is a brand new experience for me. I've never done a live stream before, and I'm ready to talk for about an hour. I got my trusty water right here. I think everything's good. I got the light working. In this video, I'm going to be talking about AT&T stock and basically do a stock analysis on it. And for those of you that don't know me, hi, my name's Chris. I talk about financial independence and investments. So please make sure to smash the like button to basically push the video out to more and more people. All right. So AT&T stock. So why am I talking about AT&T stock? AT&T stock has been one of those great dividend companies that every dividend long-term investor owns because of the great dividend yield. Okay, and me, I'm really bullish on AT&T stock. I really believe in the company, but in this video, I'm gonna try to be extremely unbiased. As you can see up here in all the tabs, I have all the tabs ready to give you all the information, all the facts, the good, the bad, and the ugly of AT&T. I'm gonna give you the pros and the cons of the company. Okay, and I believe if I talk to you guys about the step-by-step process on what to look at and how to research a company, that could really help you guys out when you are doing your own research on specific companies. Okay, I'm not a financial advisor, but I am one of those people that have AT&T stock in the stock portfolio, and you might call me crazy, but AT&T, I have 25% of my portfolio is AT&T because I believe the company has way more pros than cons. Okay, so AT&T stock. So for those of you that don't know what AT&T is a telecommunications company that has a lot of phone services. Not just phone services, they have many different types of assets and many types of different things that they do when it goes to the media firm. Okay, and as I'm talking about different tabs, I might start closing different tabs. So you guys won't get confused and for the computer won't be too slow on me, and just to make sure you get enough quality content to make sure everything's doing good and everything's doing well. Okay, so AT&T stock. So one of the first things that I like to do when I look at a company is to actually go to the actual website. Okay, and that's what this is, the official site of AT&T. So to go to any company's website, you just basically Google, in this case, AT&T website. You know, real basic stuff. Okay, so as you can see here in AT&T stock, they offer phones, they have wireless plans. As you can see here right now, the biggest thing right now that's going on is basically the iPhone 12s and the 5G. Okay, and AT&T has always been, I guess, second place to Verizon when it comes to the wireless networks and the 5G. Okay, but there are a lot of rumors going around about that AT&T is a little bit farther ahead of Verizon. Okay, when it comes to Verizon versus AT&T, the only real difference between Verizon and AT&T is that Verizon has more coverage in the United States than AT&T. Okay, but it's not, you know, it's a difference, but it's not too big of a difference. You know, it's not too far off of a difference from AT&T versus Verizon. Okay, so when you can see when you guys scroll through websites of a company that you're interested in talking about, it's you know, it's real basic stuff. You could kind of click through it and everything. Okay, but the main thing that you guys should look at is the investors' relations. When you guys look at a company's, you know, financials and their earnings and how profitable a company is, always go to the investors' relations. Okay, by law, every company has to give out information of how they're doing every quarter. Okay, if they're profitable, what are their plans for the future? What are they going to be doing? What they have done with their money? All the information is going to be in the investors' relations. Okay, so basically the basic simple stuff is basically you could either look up on this thing and go investors relations, and you could go for it. All right, so in this example I already kind of did it. So in AT&T's investors relations, it would look something like this. Okay, and you're going to look at financial reports. Okay, every company in the stock exchange has investors relations and has financial reports. Okay, some of the things that I always like to look at when it comes to any company, okay, is a couple things: their 8K form and their 10Q form. Along with their conference calls, I always look at the transcripts for the conference calls, because sometimes when you're listening to the conference calls, the person may not mouth or pronounce the word correctly. So always go through the transcripts. Let me see if I can find it right here. See right here, transcripts of the actual conference call. So as you're listening, you could kind of be reading and follow along to what they're saying, okay? And that's how you could kind of get a better understanding, okay? Right here in the financials is going to give you all the information you will need about a company, the past earnings, and what they've actually been doing and what they're going to be doing in the future, okay? So your news releases, like what's going on in the news, the highlights of the company, investors briefing, transcripts, the presentations that they actually have done, the Form 8K. That's some of the things we're going to be looking at, okay? And one of the things that's been breaking news lately when it comes to AT&T is that AT&T just reported their Q3 earnings, okay? And everybody knows like everything that's going on with the pandemic and everything. You know, AT&T is one of those companies that hasn't really been performing well, but it hasn't been performing too badly, if that makes any sense. All right. So before the coronavirus came, they were around $38. When it came, their lowest was like $26.92. Okay, and they've always kind of been hovering around the high 20s, low 30s throughout the whole process since the pandemic, since the shutdowns. Okay, and a lot of people are worried about AT&T for three different reasons. Okay, their debts. Everybody's worried about AT&T's debt. They think that it's 2018 and AT&T's debt at that time was around $180 billion. Billion with a B, okay? $180 billion when it comes to a company to be in debt. It's a lot of, it's a lot of money to owe, for their assets, okay? But you have to understand, okay, but you have to understand a couple things, okay? In 2016 and 2018, AT&T purchased DirecTV and Warner Media respectively, okay? So DirecTV, in my opinion, wasn't a pretty good investment. We all know cable TV is kind of dying, and everybody's transitioning into the streaming services. Okay, Warner Media, I think that was a pretty good investment. In my opinion, again, it was a pretty good investment. But we're gonna look at the financials just to see how great of an investment Warner Media was. Okay, so everybody's worried about three things again: their debt, the management team. There are a lot of people that don't believe in the CEOs, okay? And there was a lot of drama that happened with the previous CEO stepping down and with the new person stepping up. With the CEO now is called John Stankey, okay? Nobody knows who he is. He hasn't really been in the media too much, but a lot of people don't know that he's been working with AT&T for like 25 plus years. So he has experience working with the AT&T, team, okay? But investors are worried because he hasn't, in a way, really built up any company. When it comes to when you're picking a company, one of the main things you have to look at is the CEOs. What's the CEO doing? How are they working their team? And how, what's their vision? What's going next? Great example, Elon Musk. Elon Musk is a great CEO. You could put Elon Musk in any company and will grow that company. Just like Jeff Bezos. You could put him in the top of any company and he will grow that company, So a CEO is really important when it comes to investing into a company. For example, Tesla, it was not profitable for many, many years, okay? There was a point where Tesla almost filed for bankruptcy, okay? If it wasn't for an $80 billion loan that Tesla got, Tesla wouldn't file for bankruptcy, okay? Tesla was at a point where there was no holding back, okay? Like they were so far in debt, there was no profitability, nothing. Since they came into the stock exchange until 2018, I believe, they were not profitable, okay? They didn't have one single quarter of profitability, okay? And a CEO like Elon Musk, having big dreams, big aspirations, he continued to maneuver all these things and leverage the money in certain ways that made Tesla what it is right now. Okay, Tesla has a bigger market cap than Ford Motors does. You understand? And that's basically it. When it comes to CEOs, it's really important to focus on the CEOs and their visions on what they want to do in the future. Okay, and we're going to be looking at that when we're looking at the earnings and the reports. Okay, so the Form K8. Okay, so let me exit this. Let me click on this. Sorry about that. So if you ever click on the conference calls for a company, it will look something like this. It will ask you to log in, first name, last name, email address, and a company. I always talk about whatever company, and you go. Okay, this is basically the whole conference call. Usually conference calls or the earnings calls, they last from 30 minutes to an hour. Most of the companies that I really research, the conference calls are about an hour. Okay, the transcripts. Here are the transcripts. The transcripts, you know, excuse me. Let me get a sip of water. Okay, the transcripts again is going to tell you everything that's going on. Who's going to be the participants? Who's talking? Who's not talking? Who's responding? You get me? See, John T. Stanky, CEO and Director of AT&T. Okay, when you listen to the I would always suggest guys to read the transcript at least once and listen to the conference call at least twice. Okay, why once and once twice? Because there's times when the conference calls to read, it's a lot. All right, this right here is about what, you know, it's a lot to go through. And the thing is, some of the transcripts, it gives you the main points. So I think it's pretty good to look at it. The conference call, on the other hand, is an hour long, and things happen. You know, people get distracted. You may not really listen to certain things at certain times, and very important key things that you have to listen to. So always suggest to listen to it twice, you know, just to avoid any issues. Okay, so let's talk about. Matter of fact, before we go into the earnings, as a quick tip for any investor or any new investors or anybody that's interested into researching into any company, always use more than one reference, more than one different website. Okay, for example, one of the main things that a lot of people talk about when it comes to AT&T is their dividend. AT&T has a very high dividend yield. A lot of dividend investors love AT&T because of their dividends. They have 7.28% dividends, I believe. Okay, so one of the websites I like using is Seeking Alpha. Okay, Seeking Alpha, I only use it to like basically research dividend and dividend growth. I don't really look at Seeking Alpha for the financials. When it comes to financials of a company, I go straight to the source, straight to the company, and look at the financial reports through investors relations. So see here, Seeking Alpha is a great source when it comes to dividends, and dividend growth is going to give you a lot of information. Okay, so again here you see 7.36 is the dividend yield right here highlighted for AT&T. The payout per year per share, $2.08. Okay, that's 52 cents every 3 months. They pay out quarterly. Okay, and the payout ratio is 65.02%. Okay, so for a lot of people that don't know how the payout ratio works, okay, the higher the payout ratio, the higher. Okay, how can I explain this? Okay, so let's say a company is profitable. Okay, their payout ratio will depend on how much percentage of that profitability is going to get distributed to the shareholders as dividends. Okay, so for let's say every $1 million that AT&T has, $650,000 is going to be distributed through dividends, you know, to the shareholders. Okay, and 65.02% is a pretty good margin. I know when people think of 65% of the profits, it seems high, but that's a pretty decent payout ratio percentage for me. Okay, when it gets a little high, it's usually with the energy sectors and real estate sectors. But as a telecommunications company, you know, I think 65% is pretty good. I think Verizon has like 75%, and T-Mobile has around the higher 70%. So AT&T has a lower payout percentage than Verizon and T-Mobile. Okay, and AT&T also has a higher dividend yield than both of those companies. Okay, and you can see here the dividend growth for the past 20 years. They've paid uninterrupted dividends for the past 36 years. So 20 years of dividend growth is good. Okay, and when it comes to AT&T's dividends, a lot of people get a little worried because the dividend is so high. Oh man, I'm a dividend investor. I'm gonna invest into AT&T because it's so high. I'm gonna get paid really good dividends, you know, quarterly. Okay, but many investors are worried because of their debt. It's reported to have $180 billion in debt. Okay, and having such high dividend yields, is that sustainable? Okay, and there's where a lot of investors worry about AT&T. So again, we're gonna look through all the financials. We're gonna go through it step by step. And here's another website I like using as well, Nasdaq.com. Okay, it's not loading. But Nasdaq.com is going to give you a whole bunch of information. And for a lot of new investors or people that want to get a step ahead, if you go to Nasdaq.com, it gives you a lot of information about IPOs and companies that are going into the stock exchange and ones that are not. Okay, so you can see here. Here's the chart for AT&T. Okay, excuse me. For AT&T, the computer's kind of going a little slow, but you can see here on the left side. On the left side right here, you see dividend history, the historical quotes, financials, earnings, PEs, PE ratios, all these things, right? Nasdaq.com is a pretty good, source, and I like using it. It gives you a lot of information. Okay, again, when it comes to the financials of a company, I'll always go straight to the source. Okay, so here's the yearly chart of AT&T. So you can see here, like I was talking about, but this was pre-Rona. Okay, when the virus hit, sank down. Okay, lows of $26.77. Okay, so let's look at the past 5 years. So in the past 5 years, you can see AT&T kind of goes up and down a lot, and here's where a lot of people don't really understand it, or where hype kind of gets into the way. Okay, in 2016, AT&T purchased DirecTV. Okay, so you can see there was a lot of good news. AT&T stock went up. 2018, they bought Warner Media. And for some reason, the stock went down. Okay. At the same time, you have to pay attention to what the company you're researching is doing, how they're maneuvering, and their future assets, and what they're planning to do in the future. Okay. So right here, in 2018, many people started wondering and started to get worried because in 2018 they started, dang, AT&T has $180 billion in debt. This is not a good investment. And here's where people started to get scared and they started to pull out. Okay? They started to pull out, and you saw a big dip. You see the big dip right here from 2018 to 2019. Okay? They started seeing a big dip. Okay? But in 2019, they started seeing that Warner Media was being profitable. They started seeing that AT&T started to do things to start to pay down their debt. So here's where from 2019 to early 2020, they start to go up again. Okay, so in my opinion, there's a lot of good things that's going on with AT&T right now. Next, so let's look at the earnings really quick. No, let's talk. I'm not talking about this. This was the previous CEO. Good question. This was about their previous CEO. This was the previous CEO, Randall L. Stephenson. Okay, when I was talking about the inexperience of the management, he was one of the ones that was the most experienced in the management team, the previous CEO. Okay, he had a lot of criticism because of the acquisitions of DirecTV and Warner Media. He was the one that I guess forced AT&T to be in all this debt. He had a lot of scrutiny, a lot of bad media, like all the attention that was going towards him was bad. Okay, but when his time in the AT&T stock didn't really move up or down, it stayed real stagnant. So there was no real good news when it comes to Mr. Randall right here. Okay, but when it comes to John Stankey, let me see if I can show you guys John Stankey. No, not Stankey like smells. See, even Google says stinky. It's not stinky, guys. Stanky. All right. There's no images of him. John, where are you, John? There it is. That's Mr. John Stankey. All right. He looks like a very professional fellow. He looks like he is ready to go. Okay. Let me tell you guys something. When this guy took over as CEO of AT&T, he publicly stated one of the main things he's going to be doing is paying down debt. He's going to make sure his assets, are being profitable. That the main source, the bread and butter of AT&T, which is the telecommunications, with the phones, with the Wi-Fi and everything, the bread and butter stays profitable along with the other assets. Obviously, you have to be profitable to become a company, to keep growing. Okay, but he was the one that said, you know what, we do have too much debt. I understand why investors are worried to invest into the company and giving us, the cheek. Okay, he understood all this. Okay, he understood all this. So one of the main focuses that he started doing was, you know what, we're gonna pay down debt. And he did. He's doing it right now. Okay. Well, that's for another video. So let's quickly look at their earnings. AT&T Q3 earnings. Okay, so when you go to our earnings report, it will look something like this. Okay, it's going to give you basically bullet points to what AT&T has been doing, what they're going to be doing. Okay, so some of the business priorities. They're focused on market-based priorities, 5G wireless and fiber-based connectivity, expanding reach of software-based entertainment platforms, relentless commitment to customer experience. Good. Here's where the 5G it becomes really important. There's a big race to master 5G. Verizon, T-Mobile, AT&T, even Apple's iPhone 12 has a built-in 5G source. Okay, who's going to be the first company to actually master 5G and push that company above everybody else? Okay, right now the number one telecommunications company is Verizon. Again, Verizon because they cover more of the United States than any other company. Again, AT&T is not too far off. Okay, but if AT&T masters 5G, like really gets a grip of 5G before anybody, this company right here could be real profitable because everybody's gonna start, merging, or not merging, but like moving towards AT&T. Being effective and efficient in everything we do. Great. That's everybody's business priorities, to be effective as much. Okay. Improve their balance sheet and deliberate capital allocation. Okay, that means basically they just want to make sure they stay profitable and focus on the different, the different sectors that they have within the company. Investing into strategic growth areas, 5G wireless, fiber, HBO Max. We haven't even talked about HBO Max yet. Committed to supporting dividends, solid 36-year record. See, and 36 years of paid dividends. Further debt reduction, focus on metric improvement, paying down debt, basically continued portfolio review, monetizing non-core assets. Okay, the Q3 results. So let's see the results. Okay. The executive market focus strategy, strong connectivity results. When it's talking about connectivity, it's talking about the cell phone plans. Okay, 1.1 million postpaid net adds. Awesome. Okay, here's where AT&T starts to. Here's where AT&T's bread and butter is. Their plans. Okay, the postpaid net adds. Okay, 1.1 million. There was a lot of analysts that predicted that they were going to actually lose people from their phone lines. Okay, AT&T closed 1,200 stores across the nation. Okay, AT&T wasn't really being profitable because of the coronavirus, but yet in Q3 they added 1.1 million postpaid net adds, 645,000 postpaid voice. That's great. That's solid. 357 fiber net adds. Awesome. Great ads. Total HBO Max, here's where HBO and HBO Max is. Domestic subs top 38 million. Wow. 57 million worldwide. Awesome. I believe in Q2 they didn't have 38 mil. They had like 34 mil, 36 mil. 30 million subscribers when it comes to HBO Max. And here's something else, okay guys? AT&T, whether you like them or not, AT&T, yes, they have a lot of debt, but you have to see what they're doing, okay? You see when they talked about their asset allocations, they have a lot of things going for them. They have their cell phone plans, the wireless plans, okay? They have their direct TV, the AT&T TV. They have HBO Max. They have Warner Media. They have the they have the Latin American media too. Okay, they have 5 different assets off the top of my head that makes them money. Okay, when it comes to Verizon, they don't really have too many assets on if it's not the wireless plans, they have nothing else. HBO Max, it's going to be competing against Netflix, Hulu, Disney Plus. Yes, they're competing against the big dogs, but there's 38 million subscribers, 57 million worldwide. That's great. That's awesome. Being effective and efficient, business transformation on track. Okay, optimize sales distribution to align. Okay. Deliberate capital allocation. Awesome. Okay. Improved cash flow, significant debt management. Since Q1 reduced to extended 30 billion of near-term maturity, expect 2020 cap. Ooh, look at this. Expect 2020 free cash flow of $26 billion or higher with a dividend payout ratio in the high 50%. Awesome. Look at that. Look at that, guys. A company that has so much debt could potentially have $26 billion in free cash flow. Free cash flow means after the capex, after all their expenses, they're projected to have $26 billion in free cash flow. what they're they could use that money to reinvest into 5G, fiber, HBO Max, back into the company. You know, $26 billion in free cash flow is pretty solid for a company that has so much in debt, okay? And when it comes to investors doing research, guys, you have to really look at something, okay? AT&T is not going to pay all this money in debt all in one shot, okay? Obviously, they're going to be paying it quarterly, monthly, yearly, whatever the case may be, but they're not going to be paying $180 billion in one shot, you know? They're giving themselves some time to pay everything off. Debt, it's like you're paying your house, okay? You pay off your house in 30 years, okay? AT&T has a certain time frame to pay off their debt. $26 billion in free cash flow. Look, that's after all the bills are paid. If anything, they could, after they reinvest into the company and try to improve some of their assets, they could even start chipping away at the debt a little bit faster. That's great. Awesome. Awesome. These are the charts of the net ads, okay, the subscriptions. From Q2, they use 62.9. These are in millions to 63.5. These are the net ads right here. The fiber, you see how the fiber subscriptions have been going up every quarter. Every quarter. Great. Domestic HBO, here's HBO Max subscriptions. Last quarter they had 36.3 million subscribers. Now they have 38 mil. Premium TV losses. Okay. So you can see here in the losses when it comes to AT&T TV, DirecTV hasn't really been doing well. And plain and simple, they haven't been really doing too well. Okay, streaming services have been kicking ass. Okay, let me just plain and simple. Okay, so but here's something that people don't know. Even though DirecTV is a dying breed, DirecTV has been profitable for AT&T. If I remember correctly, AT&T gained $2.1 billion of profit in the last 5 years because of DirecTV. You know, for a dying breed, making $2.1 billion in 5 years, I think that's pretty solid. I don't care. I think that's pretty solid. The financial summary, okay? So when it comes to this right here, I always look at this, okay? The CapEx and the free cash flow, okay? Just this quarter alone. I know this is going to be talking about the totals of the year, right? Of the revenues. But here's the free cash flow, cash from ops, okay? So you're going to talk about the CapEx and the free cash flow of that specific quarter, okay? You see, last year, they had 6.2 free cash flow and the CapEx of $5.2 million, okay? Billions, my bad. Right here, billions right here, okay? So a year later, where supposedly they were doing bad, and they're still doing bad, they have more cash flow and less expenses. That's great. Look, 8.3 free cash flow so far year to date, 19.8 billion year to date. You know, for a company, guys, man, for a company like AT&T, it gets a lot of heat because of their debt. Like, if you guys could really tell me a real big argument, if it's not their debt, tell me why AT&T is not a great company. Tell me why AT&T is not a great company. I know. I'm not supposed to be biased, but seriously, like, so far we've been looking at these numbers. Are you not impressed by these numbers? You know, $19.8 billion in free cash flow so far. They're projected to get 26 billion or higher and still pay out their dividends. Come on, man. Come on, man. Come on, man. Here's basically talking about the subscription ads, entertainment ads, the wireless ads. Awesome. Warner Media. Look at that. We haven't even talked about Warner Media. Guys, again, when I'm saying we're not talking about some stuff when it comes to AT&T, people are not paying attention to AT&T. Look at that. Warner Media. So, Warner Media's theaters, movies, okay? Warner Media has been real profitable for AT&T. This year, not so profitable. Excuse me, my eye. Something's in my eye. All right. This year, not so profitable because of the coronavirus. Theaters have been shut down. You know, less ad revenue because of the virus. People want to be in streaming services. You get me? Warner Media was going to take a hit. Warner Media was going to take a hit. Okay, Warner Media was going to take a hit. But when this virus passes, when the day comes, because this virus is not going to be here forever. When this virus passes, Warner Media is going to take off again. And people don't know. Like if you're one of these investors that buy companies at a cheap price and wait for them to grow, growth investing, value investing, I think AT&T is a good play. Because right here, Warner Media take a huge hit. Look, estimated 1.1 revenue and 1.1 billion impacted due to COVID because of the shutdowns. Sorry, guys. I know. I think there's gas in the water. All right, Latin America segment. Look at the Latin America side. Okay, and again, the wireless ads, the impact of revenue. Awesome. Capital allocation and liquidity updates. Again, we talked about the free cash flow that they have. Oh, look at this. Let's talk about their debt. Awesome. We're talking about debt. Okay. So you see here, June 14, 2018. They had a total of $180 billion worth of debt. That's a lot. And it was in 2018 they had all this debt. Okay. A year later, in 2019, they paid it down to $151 billion. And right now in Q3, they only have $149 billion in debt. Okay. In my opinion, man, you paying down $31 billion in what, 2 years in debt? That's great. And on top of your free cash flow that you have, I'm predicting right now, I'm gonna make my first prediction. I'm gonna do my price prediction a little bit later on in the video, but I'm gonna do my first prediction right here, guys. All right. I predict that AT&T's next quarter earnings, their debt, it might be 145 billion. I think because when they close next year, I think their next earnings report is gonna be around January, so they might even start off the year being a little bit debt free, not debt free completely, but they might pay off some of their debt a little bit more than that, because it was a big jump from 2018, let's say 171 billion to 2019, they paid $20 billion in debt. So they might even pay down let's say another $5-10 billion in debt. If AT&T goes to $140 billion in debt, let's say they pay down $9 billion in debt. All right, would you start to believe in this company? Would you really start to believe in a company that's $140 billion in debt, potentially $130 billion in debt? I would. It's all about this, guys. If there's profitability in a company, if there's revenue in a company, if you see potential growth in the company, that's the company, okay? Their debt could be paid off, okay? Just, again, look at Tesla. Tesla wasn't profitable until recently. The past 2 or 3 years, Tesla started to become profitable. AT&T, it has potential to be really profitable because of all their assets. Awesome. I think this is great. $149 billion in 2 years from 180. I think that's great. That's great. That's great. That's great. Okay. Debt towers. The debt towers, again, about the debt. And you see that every year they're gonna have to be paying a little bit more, money into their debt, which is fine. It's good and bad. Okay. It's good now that they don't really have to pay too much down in their debt, $2.3 billion in debt. But since they have so much cash flow right now, they could throw 2.3, and they could even, they could have money roll over. Next year's gonna be a little bit profitable. They might have more money, left over. They're gonna be still paying down debt. And instead of the 2.3, they might even pay down 10. Boom, 10 billion. And I think it's pretty solid. I think it's solid. $3 billion asset sales announced and expected to close. And look at that, $3 billion in asset sales announced and expected to close in Q4. All right, so that's the earnings, man. All right, so investors briefing. Here's another option when you go to the investors relations in the company. You could go to the investors briefings. Again, here's going to give you a little bit of the same information, but some things may give you guys a better understanding, better visuals, better information, better statistics when it comes to certain things. Investors briefings. And it goes to the contents. You can see the contents. You're going to talk about the communications, world media in Latin America, how COVID impacted them, the financial price, and right here, the financial and operational information is basically how what they've used the money for and what they're going to use. What have they used the money for, and what are their future plans with the money that they currently have now? Okay, and in communications, the communications is their bread and butter. Okay, $34.3 billion down from year to year, decline. Okay, $26.6 billion down 2.7 year over year, reflecting lower entertainment group and business wireless expenses. Okay, I mean this year, everybody's been really hit by the virus. Okay, the a lot of the things that weren't really impacted too much were like those really big blue chip stocks like Amazon, AT, well, not AT&T, Amazon, my bad, Apple. I was about to say Apple, but the A's messed me up. The A's, 7.6 billion down. Okay, mobility. Here's awesome, right here. Okay, ow. Okay, $17.9 billion in revenue, up 1.1% year over year due to that higher equipment revenues offsetting service revenues pressures from lower international roaming services. Okay, service revenues, they're down 0.3%. Equipment revenues are up 6.4%. Okay, again, guys, like you have to, sometimes man, like a lot of analysts, like you could see, like if you could see some stats of AT&T, there's a chart that says like buy, hold, sell, and analysts always predict companies like analysts say AT&T is 30% buy, 50% hold, and 20% sell. Okay, but sometimes analysts are predicting companies based on what's going on today. You know, us as an investor, and you as an investor, I know you guys are going to be investing for the long term. Okay, and it's not always a great idea to invest, like day trading and forex trading, like stuff like that. That's kind of spectacle. This speculation investing is not a really good thing. Okay, investing is investing, if that makes any sense. Okay, um, companies have ups and downs. Okay, you just have to see it from where they are now to where they're going to be in 5 years. Would you invest in AT&T in 5 years? Their debt's going to be lower. They're going to have stronger assets. HBO Max might have more subscriptions. Who knows? HBO Max could, pass Disney. Who knows? In 15, 10 years, HBO Max could pass Netflix. It could pass Hulu. You know, there's things people have to think about when you start researching companies. Okay, so AT&T earnings, the churn, the smartphones. Smartphones. This is basically going to give you guys a lot of information about ads and sales, the earnings when it comes to different types of groups. Okay, and I saw smartphones. I saw smartphones around here. 4.4 million postpaid smartphones gross adds and upgrades in the quarter. Awesome, look at that. Okay, and I'm gonna do my second prediction of the video, guys. Okay, I'm predicting that number for smartphones is gonna be way higher. Okay, why? Because of the release of the iPhone 12s. Apple did like a little partnership with Verizon because of their 5G. Okay, but when it comes to who's in first place right now in 5G, like who's really taking over the 5G right now, who's really getting a little bit better grip in 5G is AT&T. AT&T, right? So if you're adding the number one technology company in Apple with potentially the number one 5G company in AT&T, they're offering a phone worth of 5G. If you're not gonna, why would you get a phone with 5G and a company that's only offering 4G? That don't make sense. You're gonna try to be compatible with your stuff. You're gonna take the 5G phone, the iPhone 12. You're gonna take a company like AT&T that's offering 5G, and together you're gonna have this great increase of speed, great graphics, all these great things. Okay, and the iPhones, people love iPhones, man. How the iPhones are the graphics, the upgrades, what they offer, what they could do, what they can't do, how different emojis and duck faces people have. Yeah, people love that stuff. And when it comes to telecommunications companies, AT&T, Verizon, T-Mobile, they always have like deals for the clients, for the customers. Why? Because they're trying to sell these smartphones. They're trying to sell these plans. They're trying to make sure they're hooked onto them. And AT&T, if they're the number one player in 5G, they could reel in a lot of Verizon customers. They could reel in a lot of T-Mobile customers. So in this quarter, 4.4 million postpaid smartphone gross adds and upgrades in the quarter. This is going to be a lot higher next quarter. I'm putting it right down. 4.4 Q3. All right. This is going to be way higher next quarter because of the smartphones. Continue those pay for upgrade rates. You know, it's going to be way higher. Okay. This is the entertainment group. This is the entertainment group. See, down 10.2% year over year. The TV subscriptions impact. Yes, entertainment group is the Warner Media and the TV subscriptions. Okay, obviously it's going to take a huge hit. It was going to take a huge hit, which included DirecTV, UVerse, and AT&T. 590,000 loss due to competition as well as lower gross ads from continued focus. Again, I think DirecTV is the dying breed of AT&T. There were rumors going around that AT&T wanted to sell DirecTV, but they were really ready to pull the trigger because they're still seeing profitability with DirecTV. They're going to have to sell DirecTV at some point. It's not going to be for the same price that they bought it for, but they could sell it. They could probably sell it for like, what, 15, 20 billion. I think they bought it for like 40 billion. You know, they're cutting everything in half when it comes to DirecTV. It's not being profitable. You can see they're still losing. They're losing customers to competition. That's all of the wireless people. So, you know, it happens. You know, you win some, you lose some. This is one of the things. This is one of the bad and ugly things from AT&T. It's the DirecTV. They're losing a lot of people. The streaming services are the new thing nowadays. Is the new age. Okay, but if they leave DirecTV, they could hop onto HBO Max, right? So, business wireline, 6.3 billion down. 6.3 billion down 2.5% year over year. Declines in legacy. Strategic and managed services, 4 billion up 1.7 year over year. For some reason, I always like seeing the percentage year over year. Okay. Because it's actually comparing it to how a company was performing the previous year. Okay, I know I've talked to a lot of people that have a lot of things that base stuff on what happened last year, but sometimes you have to focus on what's happening now. Who's gonna predict the virus? You know, nobody was gonna predict that virus. You know, Warner Media is down. Without me looking at it. Down 10% year over year. Operating expenses is basically the money that they've used. So if they've wasted a little bit more money to basically operate everything. Home box office partially offset by lower costs of Warner Bros. Including 3.2 billion of programming production costs, up 10.6. Wow, so they are wasting a little bit more on Warner Media. Okay. So, you know, theaters were down. They weren't being as profitable. 1.8 billion down 38.4% year over year. Woo! That's a big chunk right there. 38.4. Wow. But hey, this is an ugly part. This is one of the bad and ugly parts when it comes to AT&T. But you have to look at something. If they're down 38.4%, knowing potentially there might be a cure soon. Okay, because right now at the time of this live stream, they're in phase 3 to find the virus, to find the cure for the virus, to find the vaccine for the virus. Okay, if they could find the virus within 6 months, 9 months, all right, and they start distributing it to people, theaters are gonna fully be open again, and people are gonna have the confidence to go to theaters. Productions, movies are gonna start being created. Okay, I don't know if you guys have seen the movie Tenet. Tenet was a Warner Media film. Tenet was a really great butt of a movie, man. Like, if you haven't seen Tenet, I'm not promoting nobody, but Tenet was a pretty good movie. I liked it. If you guys liked Inception and like movies that make you guys think a little bit, Tenet's a pretty good movie, man. Tenet was pretty dang good. I like Tenet. My fiance fell asleep on it though. So. Hey, if she sees this, Warner Bros. Now, if she sees this, she's gonna be like, What the heck? Why you talking about me and on your live stream? It is what it is. Don't be mad at me, baby. Latin America, 1.4 billion down. Yes. Again, you know, the thing is, in Latin America, that side, the virus hit them a little bit. The lockdowns over there were more strict than it was in the U.S. So I would see why this is down. Again, when a company is down, give me, I like year-over-year comparisons. If you can see a potential bounce back for companies, you know, buy into the companies. If you do your research and you're starting to believe after your research, like let's say we kind of looked at the stats really quick, we looked at certain things, okay? If even if you read all these bad things, okay, if you want, you could look at go to YouTube videos, okay? Not saying YouTube is a real reliable source, but go see some YouTube videos. Go see why people look, listen, and watch why people don't want to be invested into certain companies. Go look at, for example, we're talking about AT&T. Go look at people that don't believe in AT&T whatsoever. Watch those videos, okay? After you do your research, okay? If you still believe in AT&T after you've seen all these videos, after all the bad things they've been saying about AT&T, and you still believe in it, in my opinion, you should invest in it, because you're seeing something that could potentially bring you a lot of money if you start investing into a company, and it could bring a lot of growth into your portfolio if you really believe, you know, that a company could grow. Maybe you see something that they can't see. Maybe they're salty because they've invested in companies like AT&T when they were at their peaks, at their highs, $38.60, and now they're salty because now he lost $12 a share, you know, in a couple months. But if you see real strong potential in a company, okay, forget about believing stuff. I phrased that sentence wrong. Okay, if you see potential statistically, and if you understand their business model and the vision of a company, why shouldn't you invest in it? You know, if you see all these assets, if you see right now they're at their lows, like right now they're performing pretty low. A little bit more water. Right now they're performing pretty low, right? Welcome everybody, welcome. Right now there are pretty lows. You could get in right now, and when they start bouncing back up, you're gonna be riding that wave when they go back up. Okay. See, right now it's gonna be talking about the financial impacts. Why this company was impacted, why did it go down? And it's about the virus. All right, distribution caused by coronavirus and measures taken to prevent the spread. Migrants effects both domestically and internally have impacted the results of operating in the third quarter of 2020. We recognize approximately 190 million or 2 cents per diluted share of incremental cost with a sequential increase in cost of protecting the front line. In addition, I'm not going to read this whole thing for you guys, but you know, it's basically talking about the effects of the virus. Lower revenues from partial close of movie theaters and postponement of theoretical releases, partially offset by lower production and other programming expenses. That's crazy. Lower production and supposedly they increased their spending by how much was it? Like 10%. The decline in revenues from international roaming wireless service due to reduced travel. Yeah. Oh yeah, travel. Higher expenses to protect frontline employees, contractors, and customers. And here's the earnings. So here's a lot of charts, and it goes deep in depth to the last quarter to this quarter. If you guys want to look into that, you guys could. It talks more about it. Okay. I want to quickly talk about the Form 8K. Okay. The reason I didn't really go. Okay, so this is the Form 8K. Okay. This is gonna tell you all the information in a nutshell, quickly, painless, but you have to read a little bit. That's a little bit of the pain. So not too much of a painless thing. All right, so right here is going to tell you the introduction, what AT&T stock is, the stock exchange, obviously. All right, so here's going to tell you the same thing. The COVID effect, what has affected this company to perform well or to perform poorly, all right? They have to tell you why the company is doing what they've been doing. They have to tell you why it's been performing the way it's been performing. They have to give you some sort of knowledge to what they're going to do with their money. Okay, because as an investor, you are part of that company. You are a shareholder. You are an owner of that company. They can't hold nothing from you. You know, that's basically like they're stabbing you in the back. They have to let you know what they're gonna do with their goddamn money, or what they're planning to do at least. You know, so in the 8K form, it's gonna tell you exactly that. Why, what, who, where, how. Basically, all right. Here, overview. Overview is basically everything in a nutshell, like I said prior. All right. And this gives you a whole great information. It breaks everything down into pieces, 2 or 3 sentences, maybe a couple paragraphs each. It's not too much of a read. It's not like the the 10Q form. The 10Q form is a little bit long. The 10Q form takes a little bit longer to digest. Okay, so AT&T. Before I'm almost on my prediction. Okay, like I said, AT&T reported their earnings, and here's where people get really excited about AT&T. AT&T earnings show solid sequential momentum. Okay. I get excited when I read positive things about AT&T because there's so many bad things. You know, I've seen people destroy AT&T. They always tell me why is AT&T 25% of your portfolio. You're risking too much money in AT&T. And I always tell them my arguments, man. Like, because the thing is, the only argument that a lot of people have about AT&T is their debt, the high dividends, and the management team. Those are not one but 3. Okay, I told you 5 reasons why the everything's doing good. Their debt's going down. They have too many assets. You know, they have a lot of free cash flow. If a lot of free cash flow means they're going to be paying their dividends. Shoot, they might even increase their dividends. I said shoot, not the other word. Okay. Shares traded higher by 5.5% of the company reported third quarter earnings on Thursday morning. Okay, they reported third quarter earnings and the revenues were beat. Okay, they beat their earnings. AT&T reported adjusted EPS of 76 cents, in line with consensus analyst estimates. The company also reported revenue of $42.3 billion, beating analyst expectations of $41.5 billion. Revenue was down 5.1% from a year ago. Okay, revenue was down, but it beat the expectations of a lot of analysts. Okay. Okay, here's another thing I want to mention really quick. Now that it's talking about analysts, okay? There's investors that only follow what analysts say. Okay? Let me repeat that again. There's investors that only follow what analysts say. Okay? Analysts, they have a lot of experience. They go through companies every day. Okay? But sometimes, you know, human error happens. They could miss out on certain things that you may not see. That's why it's always good to listen to the conference call twice, read the transcript once, go through the 8K, go through the 10Q forms. It's always good to, you by yourself, do your own research. Don't rely on no YouTube person, nobody on the website, or no analyst to dictate your money. It's your money. How you gonna let somebody from across the nation tell you, hey, no, put your money in this company because this company might grow in 2 months? No, man. Invest in your future. It's your money. It's your money. Me personally, I've seen all these bad stuff, all these bad reports about AT&T, and the same 3 arguments. All right, and I'm still investing into AT&T consistently, you know. And my second largest holdings is Apple. I'm not saying AT&T is gonna be better than Apple. That'll be ridiculous of me saying that. So please, I did not say that. I'm just saying AT&T has a bigger weight in my portfolio than Apple. AT&T reported 645,000 new net phone subscriptions in the quarter, far exceeding analyst expectations of a net loss of 9,000 customers. Woo! Look at that. Look at that. Analysts could be wrong. I'm telling you. Analysts thought they were going to lose 9,000 customers. They ended up gaining 645,000. That's a big, middle finger slap in the face to you, analysts. What y'all know, analysts? again, sometimes it's about you doing your research. People like, for example, I don't want to say like me because I don't want to have too much of an ego or whatever. But people that do the research, I don't know if you guys ever seen Financial Education with Jeremy. He does his research, man. He does his research. That guy knows what he's talking about. There's some YouTubers out there that know what the heck they talking about when it comes to stocks. Okay, he does his research. I saw one of his videos. He's kind of the one, the reason why I look at all these things. There was I forgot what video it was. There was a video he said, look, this is how you do your research. This is how, it's a good idea to do this, do that. And I started doing it. And I started, actually I started making, I started being a little bit more profitable in my portfolio because I started doing those things. I cut off some of the companies I had no idea what the business model was, and I started putting more money into companies I understood, more companies I believe in, more companies I see a lot of potential within the next 3-5 years. And me personally, I think AT&T is one of those companies for me. For me, maybe not for you, but for me, AT&T said it had 38 million US HBO and HBO Max subscriptions, up from 36.3 million in the second quarter. Services now have 57 million global services. So yeah, 57 million global subscriptions for HBO Max and HBO is pretty solid, And HBO Max, I don't know if you guys ever seen one of their websites, but HBO Max offers, shows like Fresh Prince of Bel-Air, The Big Bang Theory, Friends. These companies that a lot of people love. These Disney Plus don't offer those shows, and those shows are shows that you can watch at whatever age and you continue watching. I know I've seen Friends, the whole series of Friends, like 5-10 times. Like 5 or 10 times, and it just gives you a lot of things, to enjoy. Okay, when it comes to Disney Plus, it just gives you Disney movies that Disney, created. AT&T is still well behind leading streaming videos. Obviously, they're still behind all the other streaming services like Netflix. Netflix has nearly 200 million global subscriptions. Wow. While Disney Plus with more than 60 million subscriptions. Okay, for me, in my opinion, to have 57, look at this, HBO and HBO Max have 57 million, while Disney Company with more than 60 million. AT&T is not too far behind. Hello. Whoa. Yeah, you guys just saw my dad text me. Oops. So, AT&T is not too far behind, So, so now, guys, I'm gonna tell you guys my price prediction when it comes to AT&T. Okay, so AT&T is currently trading at. Let's see this. I have my price prediction. Well, finance. Here's another source that you guys can look at. Yahoo Finance. Ticker symbol T. Come on. Do. Okay. This is making me look bad in front of my peoples. No, come on. 1 second, guys. Technical difficulties. Hey. T. Ticker symbol T. AT&T. There you go. Okay, so AT&T's share value is at $27.82. Okay. They have a market cap of 198 billion. P/E ratio 18.39. Okay. I like that number. I like that for a P/E ratio. Their beta. This is something that a lot of people don't look at. Their beta. So beta is how much fluctuation or volatility a company has. Okay, and the beta is based on the S&P 500, which is the market. Okay, that's the overall market. Anything below it, and like 0.65 for example, means it's less volatile in the market. Anything higher means more volatile. Okay, so AT&T stock is not too much volatile. Again, it's been steady. It's been around the high 20s, low 30s for a while. Okay, and this year alone, you can see like this year alone. Let's look back at the year really quick. You know, it did take a dip when it came to the Rona. And you can see here the past 6 months, it really didn't do too much. It stayed around the high 20s, low 30s. Okay. But I'm predicting, here's my price prediction, here's my prediction for this company. Okay. This company will be profitable. This company will jump and break $35. Okay. If their Q4 earnings come out positive and their smartphone sales passes, how much was it? 4.4 billion. I could see this company passing $35, maybe even $40. Okay, there's just even though Warner Media is down, the TV subscriptions are down, the profitability from year to year is down. You have to look at the future for a company. Okay, would you rather invest into a company that's already stable? And you know, if you put $20 in, you're gonna get back $20. You're gonna get back a dollar if it goes up a dollar. Or would you rather invest in a company that's beat up but can still sustain itself and be profitable and actually beat and overcome these difficulties within the next 2 or 3 years? You know, for example, airlines got destroyed. You know, airlines got destroyed. But airlines will come back. It's gonna take longer for airlines to recover than AT&T, because AT&T, as soon as the virus